Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video recap for Tuesday, October 20th, 2015. So at Sentiment Timing, we believe that human beings in the markets are irrational, and there is always an irrational element at work, and that is what creates the market opportunities that we go after. And the way we try to find these opportunities is through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators that project when to start looking for a turn. And then from there, we use our just regular technical analysis to figure out where that turn may play out. So one of the things that we go over each thing is, can the markets be predicted? And as a matter of fact, they can be predicted, and Woody has developed these timing technologies and expertise to predict when these markets are going to turn. Now, we back that up by obviously looking at where sentiment is, which has to be interpreted. But from there, we then, obviously look at the technical aspects of things. And he's been doing this for over 40 years, and obviously, he hasn't really published all that much for the retail investor. He's primarily been doing stuff for institutions, and some of the largest institutions in the world. So some of the previous calls that we just went over, the kill zone that was predicted on August 4th to hit between the 14th and the 21st, came in on the 19th, and the S&P dropped 240 points. The beige hole was mentioned on September 3rd to hit on the 17th. The S&P topped on the 17th and dropped 140 points, and we have a black hole that is scheduled to hit in the fourth quarter. Now, one thing I just want to be clear on this is that when we talk about a black hole, the last black hole that we saw ended up being a market crash. That was in September of 2014. But the thing is the black hole, when this date comes out, we don't have it right now. We didn't have the beige hole until September 3rd. We knew it was coming all the way back in August, but the actual date didn't come till September 3rd to hit on the 17th. So we don't have the black hole yet. We don't know when that's going to hit. But the thing is that when the date comes, the more important part of it is going to be when the low is going to be, because the black hole is typically your panic, selling when it hits. And we've already had 2 episodes of that, so you don't want to bank too much on it. But the thing is that you'll know when to start buying, and you're going to know when when things are supposed to get volatile. And we already know that. We've been relaying that over to our subscribers and positioning our portfolios the way that we believe the market's going to be going. So the way that I do it is I use a 3-step process. We use Woody's timing projections, and those are the profiles that the dates that give us when to expect these market reversals. His sentiment, I try to match it up with sentiment. Is it at extreme bullish or bearish readings that fits the timing profile for the reversal? And then we use the regular technical aspect, which is the price, and we try to see other bearish divergences, bullish divergences, where support, resistance, and stuff like that. And that's where we look to where I look to enter position, which I've been relaying to people through the free markets path subscription that I give away for this. So right now, last week I left you we had a very high sentiment reading, but I said it has to be interpreted, and there's a big move coming, and it could be up or down. We had another 94% reading. So you can notice we have high sentiment readings right now. Everybody is bullish on the markets, and typically we want you want to be cautious with that. But the thing is that I've been saying there's a big move, and it can either be up or down right now. So if we take a look at our regular charts, and what last week I had said, we are down. The S&P was trading right at the bottom of this wedge right here. We had bullish divergences, and there's a chance they could pop it higher. Well, that's exactly what happened. And now we have bearish divergences in place, and look what happened. We're breaking through this wedge right here. So, yes, we have high sentiment readings. We have some technical divergences in place. And the next thing that we really have to watch for is, can the bears push it through this support zone that goes anywhere from the 2014 up to the 2020. If they do that, then that's going to be a clue that the next move is probably going to be to the downside. If this support holds, then they continue to grind higher. But the overall feeling is that we're going to be looking for some type of drop. But the more important part is, when is the low coming, which we already know, it's already projected, and that is one of the reasons why I've been building a short position, is that we, as far as on the timing aspect of things, we're looking for some weakness. Technicals, we're looking that way. But the important part is knowing when this low is going to be, because one thing that I can let you know is that, when you're off by just a day, like we were here, we were looking for the low to come in on the 6th and the 9th. It made you pay, and it's typically does not happen like that. I mean, but we really can't be anchored to dates on it, and that's why we look for divergences and stuff like that. But just being 2 days off, the S&P had rallied 100 points. So yes, we're expecting some kind of weakness. We have bearish divergences. We're at resistance. The thing is that when is it going to bottom? Because if you don't know that, you can watch a trade that is very, very good turn even or even losing money, and that's really what Woody is there for. He's more on when to start looking for the turns, and how sentiment is being interpreted in his eyes, and he gives us the clue on what to look for. From that, I start to look for where these turns could take place. And like I said, from here, even though we had a turn date that was on October 6th to the 9th, we had bullish divergences in place. We already had a big drop, but again, you missed it by a day, and you got absolutely crushed. So the big part of the newsletter, again, is not being, okay, this is exactly when it's going to turn. It's knowing what to expect moving into a potential turn, and that's really what has been has been the bread and butter of our newsletters. Has been very, very consistent. So yes, we had the kill zone, we had the beige hole. Now we're in this golden halo or the black hole, and that's what we're going to be monitoring. So we're doing the 10 spots open. Last week they went really, really fast. So if you're interested, you can click on the link and use the coupon code that we have. And anybody that does subscribe, I'm giving them a free membership to Markets Path. That's where I do more of a detailed technical analysis on a nightly basis through video reports. I do morning notes as well as what trades I'm making. If you want to follow them, you follow them. But this is free. I typically charge $79.99 per month, so it's a $860 value. And with that, until next week, good luck with your trades.